me look at Salesforce. I haven't looked at Salesforce in a while. Where are they? CRM. Should be here somewhere. Oh, there they are, 146.88. I never really looked at them closely. Lots of interesting questions here, guys. Good morning, Kara. Clothing? I am not a clothing person. I am the last person you want to ask about clothing. I'm sorry. I'm like Mark Zuckerberg. I think you can wear the same thing every day. If you want advice on clothing, I don't know. I just read like a fashion magazine or something. Pick whatever they're wearing. That's if you're really that interested or focused in that. I don't follow commodities really, no. I'm a stock guy. But you know, to demo my platform, maybe I'll use the platform to do some of that stuff at some point. All right, Salesforce. Stale ass model right here. I'm slacking. All right. Salesforce.com is such a weird company. What does everyone think? Does anyone know much about the company? It's kind of one of these companies where you may have heard of them, but you don't know much about them unless you use their product at work. Yeah, they bought Tableau a while back. I never liked Tableau, to be frank. What's up, Ross? In prison, I was more with the Bloods than the Crips, Brody. We vaping all day. $20 million conviction plays. Ooh. Reflexivity in my research? I don't know. Salesforce, yeah, so $7.8 billion last quarter, 6.8 billion a year ago. That is what, 12%? No, wait, 20% growth? 15%. 14%. Whatever. A lot. That's good growth, but you have to strip out acquisitions. So maybe, I think they maybe had an acquisition that boosted earnings. I think Slack probably lapped year over year. B-Dog, I don't know. Activision had a really bad quarter. They've had 2 or 3 really bad quarters. I don't know if Call of Duty is working out. I think there's some downside, a lot of downside left in Activision, and I don't think that deal's going through. I hope the deal goes through. I hate the FTC, but gain on strategic investments, is that a one-time gain, would you say? Or do we model that? Trick question for you. Not a trick question, actually. Very easy question for you. Home gamers. Maybe I'll finally start teaching you guys something. Let's look at this together. I feel like I'm not doing much education lately. This is Salesforce.com. This is their income statement, one of the 3 main financial statements, right? Income statement, balance sheet, cash flow statement. Here, in their income statement, which looked normal to me, revenue, cost of goods, gross profit, bunch of cost here. Which one of you people is smart enough to answer this question? they have a gains on strategic investments line. You see that? Gains on strategic investments. Is that a one-time gain or something that's going to recur frequently? So when we model it, do we include it in our model? Or do we exclude it? It's obviously Juan is funny. It's obviously a one-time gain that we can't really forecast accurately. They might lose money on strategic investment, right? It's not really part of their income, right? Why would they, why would we think about this as part of their business? It's not part of their business. Their business is selling software, not making investments. So if we're trying to forecast their business operations, this has nothing to do with their business. Jay, I don't think it's a good idea to trade if you can't do it full time. Yeah, if it's not a part of their business, then I don't think that we should be forecasting it or including it in the business. That's kind of a crazy thing to do. You know, we're trying to get a sense for their business operations that are repeatable, recurring, not, you know, this one-off investment that they made. And they could be making a lot of one-off investments, but it's still not something that, let's say they were going to get acquired, something that an acquirer would pay for, because maybe the acquirer won't be doing those investments anymore, right? It's very dependent on a lot of things that are outside of the company's control. Now, it doesn't mean we can't kind of give the company credit for if it can repeatedly make great investments, which, by the way, we're not sure Salesforce can do that. It's not clear at all, in fact. But regardless. So on a GAAP basis, Salesforce isn't so profitable, but I think on a cash flow basis, they are pretty profitable. And part of it is, I'm guessing, stock-based compensation, which there was a recent essay a lot of people have claimed is pretty good about how stock-based comp is sort of obscuring a lot of what's going on in Silicon Valley. Lock-in is very real. Lock-in is generally real in software. All right, so there's the cash flow. You can even see pretty substantial seasonal cash flow. I don't think, you know, I have a very weird opinion on this, Jay. I think that most people shouldn't be investing at all, and I'm not even sure the S&P 500 is safe. You know, we assume the S&P 500 is safe, but there's no a priori reason to believe that's true. We look at post hoc, ergo propter hoc. We say that it's gone up before, therefore it will go up again, and that's not something that you should be able to hang your hat on logically, right? It's kind of silly to think that conditions will persist because you believe that conditions have persisted, therefore they'll persist forever. It's like looking out and seeing the rain and saying it'll never stop raining because it's raining right now. You know, that's silly. So I think, you know, it's just something to sort of keep in mind, that America could go through a Japan period where we have 30 or 40 years with no growth in our stock market, and this could be the day that it starts. You don't know, right? So I think, you know, there's a lot of issues there, you know, with that assumption. If you can spend all your days kind of investing in a space that you understand really well, you know, you can certainly try investing. But even then, people who can spend all their time investing, even of those people, only a few % of them will end up being good investors. So it's a very, very, very difficult thing to do. And this isn't a theoretical, unlikely exercise. I see somebody said it's like a meteor hitting the Earth. No, not even close. In fact, of the last 30 years that I've been watching the markets, many countries have gone bankrupt, currencies have had to be restated, and huge market leaders, superpowers have become irrelevant. So don't just assume the S&P 500 will go up forever. I think that's crazy. You know, you can short stocks, you can short indices, you can hedge currencies globally. You know, the very wealthy people I know, they don't make big bets on the US. Certainly some of them do. But a lot of them have geographical diversification, country diversification, so. Anyway, and they don't all have beta. You know, you don't want beta if you can help it. You want some inflation protection, that's for sure, but you don't need stocks to get that. Anyway, let's go through the cash flow statement a little bit. Motherfucking alpha. I don't know. I think shorting is not for everybody, that's for sure. And you can do just fine without shorting, but you probably are making a beta bet that, you know, you may feel comfortable with. You know, Warren Buffett, it's funny, Warren Buffett's like, oh, you got to bet on America. America's great. Okay, that's fine. He's maybe more qualified than I am to make that call because I don't know, you know. I have no clue if America is going to keep outperforming, right? Like, I don't know how to even think about that question. I haven't done what Ray Dalio's done. If you want to read Ray Dalio's work on this stuff, what makes a country great, right? What makes a country sustainable? And he did a lot of work on what happened in Japan, what happened in Germany, what happened in all these other countries, in China especially, and how these countries shifted. You know, that is the question that I really don't know the answer to. And I don't know if Warren Buffett is all cap, as the kids are saying these days, or he really knows what he's talking about, because I love Warren Buffett, he's my hero, but, you know, he's also not the world's expert on everything. I know that's a little sacrilegious for some people to say, but I'm the biggest Warren Buffett fan there is, and I don't think that he knows everything. So I like this guy asking me about what risk management model do you are using when day trading. Well, I don't day trade, so it's not a relevant question. Is accounting a good degree to have? Yeah, I think accounting is a really good degree to have, to be honest. It's a very nice paying, stable job. You learn a lot about business. You get to sort of have a passenger side. What do they call the front seat in the car? Passenger side, passenger seat. You're not in the driver's seat, but you're in the passenger seat of a lot of exciting things. So, oh, did Ray's child die? That's very sad. Sorry to hear that. I don't think there's anything wrong with a philosophy degree either. I think everybody should go to college. Not everybody, but most people should go to college. Learn something with your stupid ass. You should always be learning, by the way. It doesn't stop after college. You should be reading every day. You should be watching courses every day. There's this one great math course I was looking at. Tail hedges, sure. Sorry if the audio is not good. Maybe I'll move the microphone. Is the audio better now? Let me know. You can always give me feedback on audio visual. I don't mind that at all. I don't, I try not to trade. I'm not very good at it, Rossi. Trading is, some people are, Lupe Fiasco, my homie, taught a course at MIT.
I'm Nick Montfort, professor of digital media here at MIT.
There's logic gates on the screen. And here's Lupe.
That in here. So relax yourselves. Let your conscience be free. You're not rolling with thugs from the MIT, you feel me? Not thugs, but you know, rappers. So it's an introduction. We'll paste it out. There'll be a little call and response. You have some duties. If you have a piece of paper, a pen, or some type of writing material, or even something digital, gonna need that very soon. So we'll do that. Well, let's get into it. Rap theory and practice. An introduction to what I'm doing here at MIT.
I don't think I was ever in the same jail as Paul LaRue. Too much gain. Let me see here. Anyway, I was going to point out an interesting math professor on YouTube, but I'm going to go back to what I was doing. Okay, so here's CapEx. And I think we'll leave the income statement at that, and let's go grab last quarter too. Let's go toss this over here. All right, so looks like they had some decent growth this quarter, but I wonder again if it was organic or acquisition driven. It's kind of the slowest Salesforce ever grew, probably. No, probably not, but whatever. Yeah, if I were them, I'd keep 1 billion shares outstanding. That's kind of a cool number. Keep it frozen at 1 billion. It's always hard to memorize how many shares outstanding a company has. But if you're really lit, you really know investing, you know all the companies in your portfolio, you know how many shares outstanding they have. That's when you're on top of things. I used to say that some people can tell you the batting average of every New York Yankees player. I can tell you the S&P 500 earnings estimates for every S&P 500 constituent. That's what I used to say to like mic drop interviews and stuff like that. All right, here's another quarter of cash flow. So it looks like they have a big bolus cash flow in Q1. I don't quite understand why. Maybe somebody out there does. A little weird. to be honest, but companies decide the shares outstanding. I will not be opening a hedge fund. Sorry, Ross. Wait, what am I doing? Plus 68 minus this. Let's see, gain on strategic investment, that's working capital. Okay, cool. So that's 3 months. Sweet. They do a 3-month and a 6-month, which is nice because a lot of companies just do the 6-month or 12-month, which is really archaic and annoying. All right, so not negative free cash flow, but basically break-even free cash flow for 2 quarters. But again, it doesn't kind of matter if they have this one big bolus quarter every year, which it sounds like they do. So let's go grab that and see what's up with this very weird seasonality in their business, where Q1 is like this massive cash flow quarter. And it's not a massive net income quarter, as you can see. Maybe they just collect their bills. I mean, honestly, that's not unreasonable. Yeah, there it is, accounts receivable. They just basically, every January, February, they basically say, hey, you gotta pay up. Yeah, on those yearly contracts or something. It's kind of weird that you gotta pay your yearly contract in the April quarter. So February, March, and April. Chrome is out of control, man. This, especially this Edgar website. If I resize the window, it fritzes out. All right. Oh, this isn't, yeah, hold on a second. What am I doing here? This is 3 months over here. Cool. Notice the stock-based comp. Quite a lot. Okay, so I don't know what Q4 looks like. Maybe they also collect bills then. So let's see if we can't get their 10Q. I'm sorry, their 10K. All right, here's the 10K for Salesforce. We should probably read this in detail anyway. So if you want to read salesforce.com's 10K, pretty good read. You can always get these documents on sec.gov. Really a lot more detailed than the 10Q. We aspired to have 50% of our workforce made up from underrepresented groups, which we define as women, Black, Latinx, Indigenous, multiracial, lesbian, gay, bisexual, trans, queer, people with disabilities, and veterans, and they reached that. Good for them. Good for them. I mean, you know, revenue is maybe more important than that metric, but that metric's important too. I like that. Good for them. Good for them. I know some of you guys are laughing, but to me, I do like watching some of those underrepresented people get big wins, make millions of dollars. It's a prestigious company. that opportunity should be available to everyone. I still think the revenue and earnings are more important than that, and I'd rather take a less diverse company with a lot more earnings than a diverse company with less earnings. And maybe that's not very woke, but that's my opinion. But if you can have diversity, it's not a bad thing. We got their RPO we got to look at, I guess. Yep, no, that's probably true, Polaris. That's probably true. I would agree, if they're competent, who really cares? But you want some, again, you have to have been a manager, or maybe even the CEO, to understand a little bit the dynamic here, where I certainly see a lot of people who just working with me will probably make them a millionaire. I want those people to be, you know, to be a diverse group. Because everybody should have that chance, I guess. You know, maybe that's lame or too woke or whatever, but I always enjoy seeing somebody who didn't think that they could really make it because, you know, they're whatever. What they felt was like they weren't getting chances, you know, as many chances as somebody else. I don't know, it brings a smile to my face when I see that. So, kind of like rooting for the underdog to some extent. But again, it's not my main focus. I mean, some people, that's like all they care about. You know, to me, I really care about performance. You know, that's it. You know, if the person can't perform, I'm not going to hire them. Period. The end. You know, but it is nice to have a diverse crew. Daniel has an interesting point. I mean, it just personally makes me happy, to be honest. I don't know. You don't see a lot of minorities in pharmaceuticals, for example. So, you know, if I have a chance to, again, maybe it sounds weird, but I don't know, I just kind of have a chance to mentor a black executive and watch that person really blossom and succeed and become rich, that makes me happy. You know, it makes me happy when they're white too, you know, but it's you know, it's something that I think is cool. Can't explain why, but, you know, it just is. I think it's like that underdog syndrome to some extent. You know, it sort of sucks to me that, you know, that whatever is happening in society makes, you know, there's, you know, very, very, very few people in pharma or in tech that are black or women or, you know, all kinds of things like that. And I don't know, it just kind of sucks. But again, it's not like my raison d'etre, you know, my be all end all that, like, this matters to me. It doesn't really, you know, it's just a idiosyncratic opportunity. All right, so we're looking at Salesforce. Trying to get a sense for the business over time, and we should be able to do that pretty easily here in a second as we churn through a couple of years of their income statement. So we set up a couple quarters, now we're going to set up a couple of years. And we just noticed right away that revenue growth has been pretty robust. 24% revenue growth, 25% revenue growth, and let's see what they'll do for this year. I've never been woke. I think woke is silly, but I did grow up in a very multicultural environment in Brooklyn, where other races were just something, was routinely, in school with very diverse, groups of people and things like that. So I'm not, I think a lot of people who are anti-woke are actually kind of closet racist. And, I'm anti-woke, but not racist. And I think that, 90% of people who are anti-woke are not racist, but there are some people who are anti-woke that are racist. And, I think it's okay to talk about and think about race without, quote unquote, being woke. I mean, there are racial issues in the country. I happen to think that they're not as bad as other people think, which makes me kind of anti-woke. But again, we can, exactly, this guy, Khan, has a funny point here, is that when you're really level-headed and you don't give in to mob culture one way or the other, you get hated by both sides. So I'm definitely hated by the woke side, but risking being hated by the anti-woke side but not being anti-woke enough. Anyway, let's stick to software. So Salesforce, they probably gave guidance. I kind of want to look at their guidance before I forecast the January quarter here. Alright, here's the company official press release, which probably, if you had to do one thing, is to read every company's official press release. My cat is with my dad. My dad's taking very good care of the cat. She basically thinks that her dad is him, so she doesn't leave his side. She follows him around like a little sidekick. I don't know what she's thinking. She forgot me. She don't care about me. I'm done. Dad takes such good care of her. He gives her a comb once a day, I think, at least. He takes a comb, and then sometimes he just leaves the comb and she uses her chin on the comb. I'm just, I can't compete. She doesn't remember me at all. Here's the guidance. All right, let's see. Revenue of around 8 billion. Okay. So let's see here. 7,400 and 600. 7,300 and 700. Let's try that. All right, 8 billion. That's 9% revenue growth. Wow. So Salesforce growth is slowing to a crawl. Full year guidance of roughly 31 billion, which is what we have here. And there's the revenue growth. Again, this includes Slack, so they were kind of slowing before Slack is my guess. And now with Slack, Slack having been lapped. I do think there's too much virtue signaling in America. That's why you've never heard me say something like what I just said before. I do it quietly. I don't have to, broadcast that I'm mentoring black executives, Because not all of them are going to make it. Some of them will make it, some of them won't, just like white executives, who I also mentor. But I do particularly enjoy it when I see somebody who maybe society didn't expect to become very successful become successful. But I don't have to broadcast that from the the rooftops like a lot of other woke people do, right? They make it the centerpiece of their company or their life or whatever. And, it's often the people that are speaking the loudest that have the most to hide. Some of the most woke guys that I know in business never talk about it. They just do it, which is a big difference. One example is actually Andreessen Horowitz, who has a community fund, a community improvement fund, basically, for black entrepreneurs. They never really talk about it, but that's how you help society, in my opinion. You have to do something. All these guys that put out press releases, and Salesforce is one of these woke companies, extremely woke. They give out at every conference they host, like Dreamforce, they give out a badge that has your pronouns on your badge, so you can twist the pronouns from he, him, to her, she, her, to they, them. So you have this like three different pin on a pin that you can twist them. I think I have one somewhere. I got to go find it. Pretty funny. Heroku, I still use Heroku. They still have a free core. Heroku just sucks compared to AWS, though. I mean, I've made that switch. It's easier to deploy, but I don't think Heroku's gonna make it. In case you want to change during the conference. You can assume I know every major figure. No, I'm kidding. I don't know every major figure in investing or tech. I know some of them, though. But who you know is not that important, to be honest. That's one of the most overrated things there is, who you know. Oh, I know so-and-so. I know so-and-so. Who gives a shit? I don't know much about Risk-Arb, so I don't even think who your father is that important, to be honest. I always meet people who their fathers are somebody important, and they often end up being the most disappointing people. They're just coasting on their dad's name. You got to be your own man or woman or person. You see, part of this new wokeness is I just don't want to go back to jail, so. I promise I'm woke now. Don't take me to jail. I can look at Texas Instruments if you want. Weight loss drugs. Ozempic and Rybelsus and all that, they're not necessarily weight loss drugs. They're diabetes drugs, but obviously people are using them to some extent for weight loss. They're safe, so at the end of the day, if people want to give themselves shots to lose weight, so be it. It's not a good look for the pharma industry. It's kind of a cosmetic thing, but, what can you do? It's a product. Pharma needs revenue. I'd rather spend time on Alzheimer's disease or something important, but that's okay. Of course, Salesforce doesn't pay taxes, at least on GAAP. But yeah, pretty amazing growth, if you can see, from 10 billion to 30 billion, kind of measured, this is massive growth, to be fair, but, consistent. Well, not exactly. The Viagra situation was very unprecedented. Not unprecedented, but unexpected. It was very serendipitous. Here, people understood that GLP-1 leads to weight loss. That was well understood from the Byetta days with the first GLP-1s. So it's a little different, but you know, I understand where you're going. Anyway, okay, so the big question is Salesforce growth stopping or slowing. Let's look at, I didn't get to look at the annual cash flow. I was so distracted by you guys. I have to go back now. Oh, it's still open. All right, let's look at the cash flow every year. If you had to look at one thing when you look through these documents, you can see that I'm pretty patient and I go through them slowly. If you have to look at one thing, right, it's this. Net cash provided by operating activities. $4 billion in 2020, $5 billion in 2021, $6 billion in 2022, right? That is really their business, right? The income statement has so much stuff going on in it that it's basically useless. Right? If you look at the income statement, the net income is just whatever. It's just a big blah. Half the net income is coming from a tax rebate. Like, whatever, right? The only thing in the income statement you can really look at is revenue. In the case of Salesforce. So many accounting tricks. No, cash flow is going up, right? So this is 2020. It reads from, chronologically from left to right. So 4 billion, 5 billion, 6 billion. So pretty good growth. But remember, there's no such thing as an asset that's unmoored from its price. Every asset you'll ever look at, there's a right price and a wrong price. And it's an investor's job to determine the two. Good company, bad company. Let me really drill this home, because everybody gets this wrong, and it pisses me off, because it's the number one lesson in investing. You know, there's a 2x2 matrix. Good company, bad company. Good price, bad price. What are you looking for in investing? What are you looking for? Which boxes? Good company, bad company. Good price, bad price. So this box is good company, good price. Well, that seems pretty obvious, right? We want that. That seems pretty obvious. Maybe Berkshire Hathaway or something like that. All right. Bad company, bad price. Maybe like an Enron or FTX. Obviously, we don't want that, right? No go. But what about these two? This one's tricky. Do we want a good company at a bad price? What's a good company? Well, we just said Berkshire Hathaway, right? What if Berkshire Hathaway stock market cap was $10 trillion? That's a bad price. Right now the price is 5% of that, right? 95% off. So why would you pay 20 times what it costs in the stock market right now? That'd be a bad price. I don't want that. Okay, well, let's pick a bad company. What's a bad company? A company with deteriorating fundamentals. I think AT&T is a good example of a bad company, right? AT&T, Verizon, all the telecom companies. Or how about all the old media companies like Paramount or Viacom or even Disney? Like, some of these companies are really going to get disintermediated by social media. What else is a bad company? Probably Snapchat right now is struggling. What else? What's a bad company that you wouldn't want to be in? A newspaper company? Maybe Gannett, Best Buy, Tribune, a radio company. Bad company. GameStop's definitely a bad company. Yeah, these are companies with bad fundamentals, right? But if you got them at a really good price, if somebody said, I'll sell you Best Buy for $1 million right now, and you know the market cap is in the billions, you're going to take it. You're going to say, this is the greatest opportunity of a lifetime. And you're going to sell it to private equity as fast as possible, right? So all we really care about is, are we getting a good price? It kind of doesn't matter if it's a good company or bad company. It kind of doesn't matter if cash flow is going up or down, right? We just have to put it into our calculator and determine, is the price we're getting good? Is, on a scale of value, right? I don't have my drawing tool here, so this is a little sloppy. On a scale of value, wherever the value hits, right, that should be, this is sort of like the barrier, right? This is the most we'll ever pay. And if we can get the stock at this price, we'll buy it, right? And if we get the stock at this price, we don't want to buy it. We want to short it. So we just have to figure out, okay, what's the value that I can get my hands on? And sometimes that's easy, sometimes that's hard. For Salesforce, this company is making $6 billion, made $6 billion last year. Probably this year they'll make $7 billion. Is that worth $138 billion? Well, if they made $7 billion every year, it would take you 20 years to get your money back. That's pretty good, actually, because if the earnings are growing rapidly, and rapidly doesn't have to be as rapid as you might think. For example, let's assume this year $7 billion. Because free cash flow is growing faster than that, 25, 11, so I would say it grows 17%. And they have a lot of costs they can cut, right? So let's assume, let's call this growth rate right here, okay? Let's assume they can grow 8% a year for, say, 15 years. Or maybe say 10 years, just 10 years. Okay? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, and after that, they just grow 1%. How about that? And they're a top software company, so it kind of makes sense. All right, now we're going to pick a discount rate. I'm going to 8%. Now we take the net present value, so we discount every cash flow. And in fact, we should stretch this out even further, just to make sure. All right, so we get 164 billion. You know what's amazing? That's almost exactly the stock price. Every time we do one of these things, we get a stock that's fairly valued. Why? This market's pretty efficient. You know, there's not a lot of bargains out there. Everybody's doing the same work we're doing, and even though you would think something like a stock price is totally random, here it is. I did some calculations and I got this number, and I want to update the balance sheet because the number's a little bit better than that, the current stock price. So maybe Salesforce is a little cheap, but they have around $7 billion in cash in the bank net. So I'm going to add that as well, because that is part of the company. All right, so I get 170 billion, which per share is $171. The current stock price is 146. Is that enough of a bargain for us to take action and buy the stock? Probably not. That's only 16%. You know, it's basically useless. You know, it'd have to be a double or something like that for me to be interested. Will they double? Can they double? Well, if we assume they're going to grow 8% for 10 years, to be worth a double, they would probably have to grow, what do you guys guess, 10%, 12%? Do you want to do the math? With this model, all I have to do is punch in a number, right? I can just punch in a number. let me punch in 9%. If they grow 9%, oh, okay, well, then the stock's worth 183. If they grow 10%, okay, stock's worth closer to like 200. If they grow cash flow 11% a year, right now we're talking 211. If they grow cash flow 12%, now we're talking about a stock maybe worth buying. It's 225. If they grow cash 15%, okay, now we're talking about a double. And you might say, Martin, they were growing cash 15%. Look, 11, 25, 17, I think that averages out to roughly 15%. So why won't they keep growing cash at 15%? Well, the revenue growth has slowed down, right? All the way down to 9%. And the stock market can do these calculations too. And the stock market is kind of valuing it like it's going to grow, quite frankly, more like 7% a year. So the stock market's not stupid. If it was obvious they were going to grow 15%, the stock would be at 300. But it seems to be becoming more and more obvious that the growth will slow down. So that's kind of why the stock is where it's at. People are starting to get skeptical of like, I don't know if Salesforce can grow 20% every year. Now, if in this next quarter, they say that next year in fiscal year 23, we're going to grow, or I should say fiscal year 24, we're going to grow revenue by 15%, then the stock will rally tremendously. And that's why tech stocks are so volatile. It's because everyone's trying to figure out this. What is the long-term growth rate of earnings? Right? And things like interest rates and stuff like that you guys are asking about, they do impact the discount rate. But if I use the same discount rate for Microsoft and for Oracle and for other software companies, then it doesn't really change the way I look at the discount rate for Salesforce. It doesn't matter, right? So it's pretty much irrelevant. If I use the same discount rate, interest rates impact all the companies kind of pretty similarly. So as long as I keep the discount rate kind of similar across all the companies, it doesn't make much of a difference. So I can put the NPV here, and you can see for Amazon I use 8% discount rate as well, but I get a stock price that's double. So Amazon seems a lot cheaper, right? And I have a +1 terminal, and I don't have ROIC for Salesforce, which maybe makes it a little undervalued, but regardless, it looks like I'm using kind of the same framework, and it looks like Salesforce is a lot cheaper than Amazon.